I would love it if you were able to do a podcast interview and a CPA or a tax law attorney on what an S-Corp is and why becoming one can be advantageous for physicians. It would be incredibly useful to also talk about the steps needed to become an S-Corp, what deductions are acceptable, and other strategies to use within the S-Corp to minimize taxes. Thanks so much. My private practice is switching to each individual physician becoming an S-Corp starting in 2020. Okay, well, I don't know that I necessarily need a CPA or a tax law attorney for this one. I've got an S-Corp. I've written about S-Corps for years. The benefit of an S-Corp is you don't have to pay Medicare taxes on the portion of your income that you call distribution. So when you are a sole proprietor, all of your income, all your profit from this business is subject to Medicare taxes. If you elect S-Corp taxation, whether you were previously a sole proprietor or a partnership or an LLC or a C corporation or whatever, if you elect S-Corp taxation, whether or not you actually form a corporation, you get that benefit that you can now call part of your income salary, on which you pay all your regular income taxes plus your payroll taxes like Social Security and Medicare. And then the other part is distribution, on which you don't have to pay payroll taxes. Now, if you're like most docs, you've already maxed out your Social Security taxes. So what you're saving is the Medicare tax, 2.9% of everything you call distribution. So if you have an income of $400,000 and you call $300,000 salary and $100,000 distribution, you just save $2,900 in Medicare taxes. Now, obviously, you're going to get the same Medicare benefit as everybody else. And so that's pretty clean savings right there. And so if it's worth the hassle and the expense of becoming an S-Corp to save that money, then it's usually worth doing. Don't expect any additional malpractice protection from incorporating in that fashion. It doesn't really give you any. Malpractice is always personal, but you may save some taxes. A lot of people think you have to incorporate to have a bunch of deductions, though. That's not generally the case. Almost all business deductions that are available to an S-Corp are available to a sole proprietor. Right? You can still write off your CME, you can write off your scrubs, you can write off your stethoscope, you can write off your business miles, you can write off, everything, all your work-related expenses, you can write off just as easily as a sole proprietor as an S-Corp. So don't kid yourself that there's some huge savings there. What there is a big hassle. You got to now start filing a bunch of extra tax forms. You've got to be filing W-2s and W-3s for your employees. You're now an employee of your own S-Corp. And so you got to do all that employee paperwork that your employer used to do for you. And so that can be a big pain. You got to file a 941 form every quarter, with the taxes that you withheld from yourself as an S-Corp. And so there's a fair amount of paperwork. And if you don't want to do it, which I can't blame you, having done it now for the last couple of years, you're going to pay an accountant to do it. And so it's going to cost you a little bit of money there. So you got to weigh that against the additional tax savings on the Medicare taxes. There are a few strategies you can use with the C-Corp, but in general, docs don't use that just because they lose that big advantage of the S-Corp. So most docs in this sort of a situation that want to become a corporation become an S-Corp. And I think that's a reasonable thing to do as long as you can declare a significant portion of your income as distribution. Remember that the IRS requires you to pay yourself a fair salary. Now, you can use a salary survey to determine what that is, or, some other reputable source or argument to determine it. But if you're going in there and trying to convince the IRS that a full-time doctor is only getting paid $60,000 as salary and $350,000 as distribution, you're probably going to lose that. And you're going to end up paying a bunch of taxes and penalties to the IRS when they audit you on that point. So as a general rule, you want to make sure you are paying yourself a fair salary and you have a good method to justify the salary you are paying to yourself. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.
My dad, your host, Dr. Dahl, is a practicing emergency physician, blogger, author, and podcaster. He is not a licensed accountant, attorney, or financial advisor, so this podcast is for your entertainment and information only and should not be considered official, personalized financial advice.